Okay, let's head into the charts. Let's get an idea of daily bias today. So dollar, I think yesterday we spoke about after taking this weekly high, that it could retrace into this daily value gap. And I happened to mention that maybe after taking it only by a small amount, these relative equal highs, which were exactly the same, it would possibly bounce around maybe further or deeper into the value gap. It's yet to break Friday's low, so staying within a range here. So the dollar can be range bound, consolidate, whilst Nasdaq can either go higher or lower. And in this case, we had another big move yesterday. So we've had a large range day for the Nasdaq on the Monday. So generally, I believe it just took the Thursday's open, and I was anticipating the bias to be bullish and to take the. I was suggesting that maybe I wouldn't, as it was pumping higher, I didn't want to chase price like I normally did or have done in the past, and wait till the 75% range of the dealing range of the weekly would be hit. It has done, but it was later on in the evening by 8 o'clock. So I missed that particular move, and I might actually go back into the reason why, where I could have possibly got in. I took a contrarian trade, made a few handles, but missed the main move after it hit the new week opening gap, because at 9 o'clock it just suddenly moved quickly, and I didn't really see an opportunity to get in. I just, many times I've had losing trades whilst chasing price. So I'll dig deeper into that bit later for my own benefit. So we've just taken, let's have a look. We haven't quite taken Monday's high. We're in this wick at the moment, so we could possibly grade that, couldn't we? So we opened wicks above the 25% range, and the open was just above halfway. We've headed down. That will be a change in the state of delivery on this daily, but we're heading back down. Are we going to revisit the original opening range gap, which wasn't filled at all? Quite a large opening range gap. Possibly retrace into this daily candle. We'll if it does retrace, we'll look at how it reacts when it reaches the high of Friday. So at the minute, calendar wise, nothing really happening on Tuesday. Most of the action is happening tomorrow, so today could be a bit range bound. Okay. Right, so we'll come back to you if I have a trade later on. Just reminding myself, I wanted to revisit the mistake I made yesterday. 9:30 opening. Forgot to put the 9:31 plus first presented fair value gap in as it was trading. Now, if I had it done, would that have helped me take a long and capture this big move up to the 75% range of the dealing range? Dealing range being from here to here, around the 75% level. So in the morning, we dipped into the new week opening gap, took the high, and then I took the contrarian to the daily bias that I outlined, which was bullish, and then peeled off a few contracts. I made a little bit of profit, but this was the part that I was missing out on. So if I have a look, okay, so price moved significantly. This could have been seen as a pullback into 75% range, or optimal trade entry. I didn't see anything in here, but as you can see on the 4-minute, the first presented value gap was formed. We came back down into it, came into nearly into the order block for this value gap, but only just slightly. But the candles actually closed and reopened on the 50% line, just above. So if we zoom in here and have a look further on lower time frames, it's difficult to keep going back. So on the 1 minute, what are we looking at? Body's still staying within the first presented fair value gap. Low taken, another low taken, change in state of delivery here, fails to take this relative equal high, comes back down into, I'll probably ignore this, this is an old first presented value gap, comes back down into what seems like another fair value gap. There's a swing low. Oh no, there isn't. Maybe on a 30-second or a 15-second, which would validate this value gap. So let's have a look a bit closer. Let's have a look. Wicks down, bodies close, just above the 50%. So could I have got into this trade? Let's have a look. Comes back out into this dealing range here, over 50%. Where would I put my stop loss? Entered here. 630. So 15 ticks. It's a possibility, but I feel more comfortable putting the stop loss here, so that maybe I could reduce the amount of contracts I had, maybe 5. That's a considerable amount. 40, nearly 50. So double what I would normally take as in respect of a stop loss. So yeah, maybe I could have done 5. I've never done this, reduce the amount of contracts as the stop loss becomes bigger. So that's something I should endeavour to do. Breaks out over the midnight first value gap, comes back down into an old, how old is that? 14th, so nearly 2 weeks ago. I don't think I would have captured it. So over the 50% level here, let's tidy that up, it's getting a bit confusing. Daily book, Yes, I'm talking to myself again. Well, not too sure I would have been able to have capitalised on that. I would have felt like I was chasing price possibly once I get over the 50% range here. Right. Trading view seems to be freezing on me regularly. It's annoying. No, I'm working tonight again. Okay. Well, I've marked out the charts this morning. What's transpired? Okay, so we have a daily high here. Regular trading hour low has been taken here. Run down into the midnight opening range. Okay, we can only see that in the 4 minute. Reached 200% level. Looking a bit messy here. And then a quick spike. I think the dollar took a dive and it's breaking out of its consolidation to the downside, reaching the 25% daily look back level. Bring that in. Here we go. Broke to the downside. Into a volume imbalance. So that's what affected price here initially. Still have a regular trading hour high and also the daily high in play. We have relative equal highs here. It's taking the midnight opening range high, initial liquidity, taking it in here, hit the most recent new day opening gap, spiked above it, come back down into the 50% range, where this fair value gap is laid over the top of it, where this previous high is. So we have optimal trade entry 652 into the one of the first early macros before 7 o'clock, and then 7 o'clock is our pre-market time. Low still in place, highs taken. Could we see this drop further down into this value gap and go higher? We are into the 750, 810 macro. reacted off an old 131 first presented fair value gap. So we can see how price, if it was to take a low here, we'd be outside of that first macro. So I'm just going to sit on my hands, wait until the 8:30 driver. Okay. I'll just add there's no actual impactful news drivers at 8:30. So if it does move substantially, that's an indication maybe that things aren't going to be very predictable. So we'll wait and see. Okay. Sorry, you might have just caught the nutrition expert Bart K. Put him on pause. 30 seconds from the 8:30. Let's see what transpires. Okay. Initially energetic. Took a lower than a high, a minor low and a high. Okay. Nearly reached into the 25% quadrant of the premium daily wick from yesterday. This dynamic price run has come from a 15-minute value gap that was created in the afternoon on Monday. Look at the 4-minute, a lot of back and forth overlapping price action contained within this reaction that we had when the dollar dropped down into the 25% 20-day look back. Okay, that 50% orange dotted line denotes the midway of the current dealing range that was created in the afternoon from Monday, and the high and the low this morning around about 4:30. So low, minor sell side, minor buy side taken initially with the 830. This was a sweep on liquidity on relative equal highs. Could it be dropping down lower to take the pre-London low? Looking at this wick here. Is it going to revisit this low? So if something was a bit cleaner in here, possibly revisited something around the top half of a possible run, then maybe it could have looked to taking a trade as we had a reaction off the new day opening gap. But as it seems, it's in a hurry just to take this low. Could it be an institutional entry order drill in here? Low of the wick with a gap laying over a previous new day opening gap, 50% here. If that was the case, really it needs to be doing it on this candle. No. Still heading lower. Order block. Tapped into it. There's the open. Just tagged it. So that, if it was to have wicked in slightly over this candle here, above the 50% range, so that's within my model of the dealing range. Dollar's going higher. So if that red candle, if it had opened and wicked into this 1 minute fair value gap, that could have been an entry. So if that was the case, 15 handles, 15 ticks, sorry, well within our stop loss management. volume imbalance. Okay, I'll come back at the first macro at 8:50. Okay, so we're nearing the 8:50 time macro. My wife's laughing at me. Talking to myself. It is bizarre, isn't it? Can you imagine being one of these people out and about using a phone to record themselves? And I've never thought about it like that. What people would look like whilst doing their own vlogging. Is that what it's called? Not vlogging, vlogging. Okay, so I've marked out a 5-minute fair value gap. Let's try and grade it as well. So let's grade the 5-minute. We're into the 8:50. Seems to be a divergence on the 5-minute with the Nasdaq and S&P. Lower low on the Nasdaq, lower high, and lower high on the mini Dow as well. The dollar looks like it's going to take out some relative equal lows. So could this mean that the Nasdaq has had its stop run and is going to go higher? Nothing to enter on, no entry for me to be comfortable taking. This is the low I'm talking about. on the S&P, the low comes down here. So we tag the 5-minute value gap, not even reached halfway. It's within this 1-minute fair value gap. Could this be an OTE? Tracing back into. Dollar still losing strength. Takes this low, then maybe not. If it continues to pass, press higher. Maybe it's going to attack this high. No, price action is pretty back and forth. That's now balanced, nearly. I'm watching to see whether it takes this high or this low. Okay, taking the low. Okay, definitely well into this order block. Not sure if we can classify that as an order block. I'll have to dig into my notes again. If the order block is not within a fair value gap, then do we classify it as one? So now we've taken this low, let's see how we react. When we look at this 15 second, that's why I don't really like the 15 second. 30-second tends to be my go-to. Now you're watching the candles paint a little bit erratically. Did spike, but didn't take any high. I'm looking at the rejection block here on the 1 minute. Euro dollar seems to be gaining a little bit of ground, but the dollar's still yet to take relative equal lows. Okay, not liking the price action, so although we've got another 10 minutes, 11 minutes left of the macro, I think I'll hold and just keep a little eye on the market until 9:30. Okay, 2 minutes before the market open at 9:30. Let's get ourselves prepared. Let's see what our opening range will be. So opening range is going to be discount. It's going to be roughly around here. So what are we looking at? 130 ticks. The 80 to 150 range is pretty desirable. We could see a definite pullback into it. Into it halfway, and then continue going lower if the dollar starts gaining strength after taking multiple lows. So 30 seconds. Not sure where it's gone. Oh dear. Made a mistake somewhere. Okay. And let's not forget to include the 931 plus first presented fair value gap. I forgot to do it last time. Right, so we're going to take the pre-London open low. Will we use this 15-minute fair value gap to continue price lower, as in making it inversion? tapping into a 15-minute order block. No, take that back, not quite. Reach the low of the 15-minute. By half a handle. This red fib is marking out my dealing range. Maybe I should be including this. I think that's more appropriate. So we've taken the 431 low. The Dow has pumped heavily. S&P following suit, but the Nasdaq is lagging. Looking on the 5-minute, dollar is dropping down into a fair value gap, which is adjacent to a downward fair value gap as it's past a major low, or we would class this as an intermediate low. I believe, could be mistaken. Trying to watch the charts and talk at the same time, proving to be a little bit difficult. So we do have a large decoupling between the Nasdaq and S&P. Particularly on the 15-minute. No first presented fair value gap as yet. Okay, I'm back to the charts. Seeing some movement. Obviously, I think now is hindsight, so let's do a tape reading exercise or back testing exercise if you like. Okay, so let's look at the 5 minute. Okay, I'm looking at the price action, lot of candles overlapping, balanced price range, balanced price range, price rises up into the 5 minute fair value gap. Here's our 931 plus first presented. So if we drop down into lower time frames, with the 5 minute being so messy, I'm always very reluctant to make a trade. So I think I mentioned here that would have been a nice opportunity for institutional order flow entry drill. Didn't give me one, and then I mentioned that there was this 1 hour fair value gap, and then we have directly over the top of it a first presented fair value gap. When is this from? This was from yesterday, so quite relevant, and we're looking at consequent encroachment on both of these overlapping. So we see it come in, wick below it, body stay above, comes back out up to the first presented fair value gap. Half of it is on the low, the low at 415, the confluence. This is the 15 minute fair value gap, dips into it, body stay pretty much outside, and then drops. What time is this? 9:59. This could have been an entry, but would I have taken it? Would I have thought that this was a stop run to then continue going? I probably would have done, thinking that this might have been an inversion, but it didn't. Reversed, came back down, back into the 1 hour fair value gap. Fair value gap here, body staying up of 50%. So this could have been possibly a trade because this is within the macro. So let's dig down into a lower time frame, 30 seconds on this area here. Okay, here we go.